Good morning, hello and welcome to Money Control's live stream. You're watching a fresh edition of Opening Bell with me, Lovisha Darad. Well, wishing all the viewers a very happy new year and hope this new year brings a lot of joy and multi-bagger returns as we step into this new year as well. But yes, it is a lonely start for the Indian markets. We are the only ones to open today. Majority of the markets are closed on account of the New Year holiday. So not much major cues to begin with. But Asia Pacific markets, those are closed. US markets, those are closed. Although US markets overnight, they did end lower. We saw treasury yields and even the dollar index saw a bit of a spike up to 108 levels. But back home for India, the GIFT Nifty is pointing to a flat start. However, the pre-opened rates, well, that is bringing some New Year cheer today and it is pointing out to a good start for the Indian markets. But apart from that, not much noise to begin with. It is a new year and we will be taking what your strategy should be at this point of time, how your portfolio should look like for this year. So we'll be taking you all through that. Don't forget to post your queries on our live feed and we will take them before 9:30 a.m. For now, let's begin with the top headlines at this hour. Good gains for 2024. Nasdaq Composite Index outperforms with 28% gain in 2024, while Dow is up 12% and S&P 500 index surges over 23%. Asia Pacific markets are closed on account of New Year's holiday. Meanwhile, the GIFT Nifty indicates a good start for the Indian markets. Brent crude prices gained 1% overnight to $74 per barrel. However, it fell 3% last year, a second straight year of decline. Meanwhile, gold prices register best yearly performance since 2010. All eyes will be on auto stocks as they report their December sales figures today. Street consensus lies on slow sales growth across most companies and segments. Alright, as we begin the 2025, we are back with Nifty below that 23,650 odd levels, and definitely now the crucial support lies at 23,500 levels. So any breach below this level could further initiate a downside. And we saw in the last session that broader indices did outperform while the headlines staged a comeback from its day's low. Nifty definitely did a strong comeback over 150 points and even Sensex gave a strong recovery of over 550 points. So today's, today's comeback and today's positive cue that is coming in from the pre-opened rates does bring some harbinger of good news. Among sectors which did well yesterday, that was your Nifty Pharma Index. However, the Nifty IT Index, that saw quite a bit of a selling pressure. Since this month is definitely a seasonally weak one, several factors will be watched out. First, we will be beginning this month with the third quarter earnings season, and we'll watch out if there is further downgrades, what the valuations are at this point of time, and if it is still palpable at the current juncture. Second, we will be watching out on how the Trump's policies unfold as he is set to return to the White House. And finally, what the US Fed has to say before we set foot to the union budget on February 1st. But let's move on and take a look at how the today's trade setup looks like. First up on your screen is the option Qs data. The Nifty put call ratio rose to 0.99 levels from 0.88 levels in the previous session. And the next is the fund flows data. Well, FIs have extended their sell-off for the 10th day now. They have sold cumulatively about 4,600 crore rupees worth of Indian equities. And DIIs, on the other hand, they have helped a lending hand and they have bought around 4,500 crore rupees worth of Indian equities. So yes, a flip-flop that is going on between FIs and DIIs, but we'll watch out how that pans out as well. Now, just a couple of minutes before we go to the opening bell, but let's get on board with our technical expert of the show, Rajesh Palviya of Axis Securities. Rajesh, good morning. So good to have you back and wish you a very happy new year.
Good morning, Lovisha. Wish you a very happy new year to Money Control team as well as the Money Control viewer. I wish this 2025 going to be a healthy and wealthy for all the viewers and Money Control team.
Thank you so much, Rajesh. But let me begin with, as you said that we're beginning with the new year, but it's a seasonally weak month. So how do you expect the Nifty to play out for this month?
Yeah, seasonality perspective, yes, January is always remain on the weaker side,
Yeah.
and looking at the overall scenario for our market at this juncture is also showing the same kind of indication, as benchmark is not able to cross 200-day moving average, struggling to cross 200-day moving average in last 3-4 attempt. Looking at the near-term, short-term structure, we believe that until the Nifty not crosses about 23,900, I think trend is likely to remain on the weaker side only. On the downside, the critical support area is placed at around 23,450, 500 zone. If at all Nifty spot breaks below 24,000, 23,450, I think we may see furthermore supply pressure, and then possibly Nifty can go down towards 23,200, even 23,100 kind of level. That's the critical support area on the downside for Nifty for next month, for January month. So 23,100 is the important and critical support area for January. On the higher side, 23,900 is the critical resistance area. If at all we crosses about 23,900, then we may see some short covering action to play out in the Nifty, and then really can extend further. But looking at the near term, short term structure and the constituents of Nifty, we believe that it's going to be a range bound month. Both side of trade we are going to have for Nifty as well as for the stocks also. Some of the theme, some of the pockets where we are focusing at this juncture, I think pharma, real estate, and some of the IT stocks are still showing good traction in terms of buying. So I think a very selective pockets are showing sustained buying action. So I think one should be very selective in stock specific action for month of January.
Okay. Rajesh, you mentioned about pharma and IT stocks that could be keenly watched out for the month of January as well. How about the Bank Nifty index? It did decline about 5% last year. How do you see 2025 setup for the Bank Nifty index?
So again, in the Bank Nifty also, we are almost trading near to a 200-day moving average critical support area. So I think any breakdown below 50,500, then it may attract further more supply pressure. Looking at the near term, short term structure, the major supply zone is placed at around 51,500, 51,700. So until a Bank Nifty not crosses above 51,700, it is also likely to remain in the range only. On the downside, 50,000 would be the major support area, and on the high side, 51,700 would be the supply zone. So I think some range bound activity we may witness in the Bank Nifty also. If we go with the Bank Nifty constituents, a few of the stocks are holding the ground, like stock like HDFC, ICICI. These two stocks are still, managed to hold their short term, medium term support area. So I think if for some traction comes in HDFC Bank and ICICI Bank can give some support to Bank Nifty to move higher. But I think we need to watch it closely for next couple of days how these two large cap banks perform, and if buying interest continues in these two stocks could help Bank Nifty to move higher. But the range bound activity is likely to be there for some couple of weeks for Bank Nifty also.
Okay. Any sectors that you are definitely not keeping a watch on, like which you think that is going to be a little risky for this month?
I think still FMCG and capital goods are still looking weaker at this juncture, as well as metal is also looking weaker for January month. So I think these three sectors one can avoid at this juncture until unless there is a substantial recovery in benchmark indices. I think these three sectors may attract again supply pressure if any kind of pullback comes in the near term perspective.
That's right. But let's quickly take a look at the first trades that is coming up. Well, Nifty has opened positively above that 23,650 mark. So a crucial support that we were eyeing out, and it did fall below that, but today it has opened positively and it is above that 23,650 odd levels. Sensex is also opened flat in the green. It is above that 78,200 odd levels. So yes, markets have positioned themselves on a higher trajectory at this point of time, but we'll see if they are able to hold in the green later on as well. If you look at Nifty mid cap and Nifty mid cap index, that is flat in the red at this point of time. Bank Nifty, however, has opened positively and it is up about 0.1% at this current juncture. If you look at the Nifty, the advance decline ratio, market is moving in favor of the advances at this point of time. So yes, a good start for the Indian markets, and we are seeing quite a bit of positive momentum coming in. If we look at the top gainers on the Nifty 50, that includes the like of SBI Life Insurance, which is doing well at this point of time. Then if you look at the top Nifty 50 losers, on the other hand, that includes the likes of Kotak Mahindra Bank. After yesterday's rise, we are seeing a bit of a profit booking. So yes, that is happening. But overall, the market is looking good. India Wix, which had spiked up, it still remains elevated above that 14 odd levels. Nifty IT index, after yesterday's decline, it is up about 0.1%. And then Nifty Realty Index, but majority of the sectors are seeing a bit of a profit booking. Nifty Auto Index down. We are seeing the auto monthly sales figures at this point of time, and Nifty Metal Index is also down about 0.3%. On the other hand, if you see the top Nifty 50 gainers on your screen, that is your Sun Pharma, Adani Enterprises, Apollo Hospital, Bajaj Finserv, Sun Pharma, all of these names doing well. ITC also demerger taking effect today, and it is up about 0.2%, one of the top Nifty gainers as well. On the other hand, if you look at the top Nifty 50 losers, that includes the likes of Bajaj Auto down about 2% at this point of time. Hindalco down about 0.8%. Hindalco down for the second straight day as well. JSW Steel down 0.4%. Axis Bank also down about 0.4%. So yes, a range bound movement, a flat in the green start for the markets, but we'll see if this expands as well. But Rajesh, how does the Nifty Auto Index looks like? We do have the monthly auto sales figures which will be rolling in today as well. How do you see auto index at this juncture?
So most of the auto stocks have witnessed a significant corrective move in last couple of months, and looking at the near-term, short-term structure for Nifty Auto Index as well as the stocks of auto sector are still on the weaker side. Nifty Auto slipped below to 200-day moving average. So I think until the Nifty Auto Index not crosses about 23,200 zone, I think pressure is likely to be there in the sector itself, as the indices are clearly showing that weakness is still there. On the downside, 22,400 is the key support area for this correction in auto index, so that needs to watch. Some of the stocks like has shown some recovery in last couple of days, but again on the higher side they are not able to cross their major supply zone on the near term, short term structure. So overall, I think one needs to be cautious at this juncture for auto stocks, as uh, very few stocks are able to hold their support area. So some of the stocks like TVS Motor are in our buying list at this juncture, but still we will wait for the number to unfold for this month. In decline, I think if we get opportunity around 2200, 2250 kind of zone, where we can look to buy this TVS Motor, but rest other auto stocks are still struggling to cross their near term, short term resistance, so we will avoid at this juncture.
Okay. How about ITC? Let's look at ITC, how it is reacting today, one of the top Nifty gainers as well, and we have the demerger of hotels business taking effect today. Rajesh, how should one trade ITC at this point of time and for the near term as well?
Lovisha, stock is showing strength, and looking at the near-term, short-term structure, stock is managed to give breakout of rounding bottom formation on the daily chart. Looking at the near-term structure, I think if stocks continues to hold above 470 zone, I think there is a possibility that we may see another round of rally in the stock, and a possible target towards 500, 510 we can see in the near term perspective. So those who are already bought and holding the position can hold with the stop loss of 470. Possible target towards 510 we can see in the near term to short term.
Okay, all right. Let's take some stocks in focus. First up is your Piramal Enterprises. Well, the company has invested about 1,000 crore rupees in the ARM Piramal Capital via its rights issue subscription. They plan to use this investment for business and other corporate purposes as well. Rajesh, Piramal Enterprises, the stock has recently seen a breakout. So, what is the next target that you're eyeing for?
So I think in recent past, yes, there is some pullback action in the stock. But still, if we analyze on the near-term, short-term perspective, 1130, 1140 are the major supply zone for the stock, which is coincide with its 50-day moving average. So I think 1150 needs to take out on a weekly closing basis. If that happens, then some recovery can be there in this stock, and then possible target towards 1200 we could see. But for near term to short term, I think one needs to follow a strict stop loss of 1070. If that stop loss, if that level breaks, I think one need to exit from the trade, because still structure is still on the weaker side, as stock is trading below to 20-day, 50-day moving average.
Okay, all right. Let's take some viewer queries because they have been waiting in anticipation, and it is the start of New Year, so they want to know their trading strategy at this point as well. Well, the first viewer coming in with their query, Naveen, on the view of RVNL. RVNL, Rajesh, how does the stock look like? Yesterday also we saw that the stock had gained significantly, and today also the stock is reacting positively after its two orders back to back.
So currently, stock is trading near to its multiple support zone on the weekly chart, which is placed at around 410. So that level needs to watch closely for near term to short term perspective. If stocks continues to hold this level, there could be some pullback action, and in the pullback, 445 to 460 would be the next target. So if you're bought and want to hold the position, can keep a stop loss of 410. On the higher side, 445, 460 is the near term to short term target.
Okay, all right. Let's move on to another viewer query. That is your Satya is asking, please ask the levels to book profits in Aditya Birla Fashion and a point to re-enter as well. Aditya Birla Fashion, Rajesh, how does it look like on the charts? We are seeing that, like past month it had reached that 300 odd levels, but now also it has come off and it is below the 300 mark.
Yeah, we have seen a significant corrective move in last couple of week. This is the fifth consecutive week where we are seeing the weakness still there in the Aditya Birla Fashion Retail. In this correction, stock has given a breakdown of its important support area of 305, which is very important for the stock to show some strength. So until the stock not crosses 305, we may see furthermore supply pressure to remain in the stock. At this juncture, as is already holding the position, I think he needs to keep a strict stop loss of 270 if he's holding the position. If it's break below 270, exit from the stock. On the downside, again, he wants to re-enter, then 255 would be the next level where if its stocks comes, he can again re-enter in this stock. 305 is the level. Till stock not crosses those level, trend is likely to remain on the weaker side.
Okay, so 300 odd levels, and once it breaks out, the weak trend is going to be weaker. But let's move on to another viewer query, that is your Kishore. He's asking the view on Happiest Mind at the current price and the range at point which would be good to accumulate. Happiest Minds, Rajesh, the stock is somehow trading near to its 52-week lows. What is the next that we can eye out for Happiest Minds?
So still trend is on the weaker side for Happiest Mind. A series of lower top, lower bottom formation on a daily, weekly, monthly time frame. Looking at the near term, short term structure, I think on the downside, 695, 670 are the next support area for the stock. On the higher side, 820 is the major supply zone for the stock on the near term to short term perspective. As he wanted to buy this stock and accumulate, I think in decline, if it comes below 700 zone, then he can start, buying in the staggered manner. 665, 50 would be the next level where the important support area is placed. So I think below 700 he can start buying it to the level of 665. On the higher side, if stock crosses 800, then he may hold the position and ride the pullback. If it crosses 800, then next target on the higher side we may see towards 900 to 950. But it may take time as the trend is still weak. There is no sign of recovery at this juncture on the near term, short term.
Okay, all right. Let's move on to another viewer query. That is your Anand Swaminath. He's asking the view on Kalyan Jewellers for the short term. Kalyan Jewellers, it's seeing a good up move. Rajesh, can we expect the bullish momentum to continue for the near term as well?
Yeah, definitely. We are holding our bullish view for Kalyan Jewelers and looking at the structure. Stock is bullish across all time frame, and we believe that once stock crosses above 790, 800 zone, I think this rally may extend to 900 level also. So overall structure is bullish. I think if he is holding the position, can hold on with stop loss of 745. Immediate target for trading perspective 790 to 800. If it surpass 800 zone, then I think rally can extend to 850, 900 zone also. So overall structure is bullish. One may hold the position in Kalyan Jewelers.
Okay, 850 levels, which is the highest target price that you have given out. But let's move on to another viewer query. That is your on Basha Bandhan is asking the view on Lupin. Lupin, how does the stock look like? Because the charts are quite positive. Past 6 months, quite a stellar run up, 45% uptick. What are you watching out next, Rajesh?
So it's outperforming stocks in the pharma space as well as in the large cap space. The way stock has moved up in last couple of week, we believe that this continuity of uptrend is likely to be there in Lupin, and we may see that stock to continue further. Possible target towards 2400 to 2420 we may see in the near term to short term perspective. I think one can hold on the position. Even in the minor decline, one can add the position. Till stock is holding about 2300, I think for trading point of view as well as for investment perspective, one can hold on the position.
Okay, all right. One can hold on at this position. Let's move to another view query. That is your Anand is once again asking the entry and exit point for Wellspun Enterprises. Wellspun, Rajesh, after the November lows, we are seeing a strong breakout. Can we expect this momentum to continue for the near term and the next few sessions as well?
So stock is now negotiating with its previous swing high of August 2024. Looking at the overall long-term structure, it's in bullish trajectory only. I think any breakout above 620, 630 may attract furthermore buying action to emerge in this counter, and then possible target towards 700 to 720 we may see in Wellspun Enterprises. So one can hold on the position. Stock structure is looking bullish. On the downside, 580, 570 are the attractive level to again, re-enter in this stock if you get any decline due to volatility in the market. So around 570, 580, you can again add on the position. Keep your stop loss around 550 on a breakout of 630. You may add furthermore position if you want to do some trading bets in this stock. Possible target towards 700 to 750 we may see in the Wellspun Enterprises going forward.
Okay, 700 to 750 for Wellspun. Let's move to another viewer query. That is your Sahil. Rajesh, we did talk about Kalyan Jewellers and that you were bullish on the stock as well. He is asking the view on P.N. Gadgil Jewellers and whether what is the medium to long term outlook because he has bought about 50 shares at the price of 809. So he's seeing a bit of a loss because the stock is trading about that 674 odd levels.
So I have very limited data as it's a recently listed stock, but looking at the near-term, short-term structure, stock is still in pressure. Stock is slipped below to 20-day, 50-day moving average. Looking at the near-term structure, I think 650, 640 would be the next support area for this corrective move. So I think wait for that correction if you want to add further more position, as he already bought at higher level. I think until the stock not crosses 720, trend is likely to remain on the weaker side. And if it's break below 650, we may see further more pressure to continue. As most of the jewelry stock, except this Kalyan jeweler, as we discussed, are consolidating and witnessing some supply pressure on the higher side. So I think the whole sector is still showing the same kind of behavior. Some exceptional stocks are there, but still PN Gadgil is also looking in consolidation for near term. So I think wait for some reversal sign above 720. There is a possibility that he may get his buying rate in next couple of months.
Okay, all right. Let's move on to another viewer query. That is, your Satvika is asking the view on IDBI Bank and whether we should exit or we should keep holding. Well, after July 100 mark, Rajesh, the stock hasn't been doing that well. What can she expect for the near term?
I think it's a slow mover stock. Stock is still in the weaker zone. This is the fifth month where continuously stock is under pressure only. As stock is slipped below to all its near-term, short-term moving averages. So I think trend is still on the weaker side until the stock not crosses above 85. I think we may see supply pressure to remain in the stock. On the other side, if stocks breaks below 74 level, I think we may see further more cut towards 65 kind of level also. So it's stock, if you still holding, you should follow the stop loss of 74 strictly.
Okay, 74 is a stop loss for IDBI Bank. But let's take a stock in focus, that is your Kalpataru Projects. The stock is reacting positively, up about 1% after the company secured new orders worth about 1,011 crore rupees. Well, the new orders span several key sectors, which is including your T&D business in overseas markets, railway business in India, and even the buildings and factories within the country as well. Kalpataru Projects, that has gained about 13% in a weak market. So do you expect the outperformance to continue, Rajesh, for Kalpataru?
I think stock is overall, if we analyze the structure, stock is in bullish trajectory only. Some consolidation is happening in last couple of week. But looking at overall structure, I think one can hold on the position. I think once stock crosses about 1360, stock has potential to again regain to its all-time high trajectory soon. So I think one can hold the position with stop loss of 1260 till these levels are intact. There is a possibility that we may see again all-time high trajectory for Kalpataru project.
Okay, just one last question before we let you go, Rajesh. What are your trading picks for this year? We are seeing a good start for the markets today, but what are your favorable buys at this hour?
So I think two stock ideas are coming in my mind. One is from pharma, that is Sun Pharma is looking bullish. So we believe that Sun Pharma can be looked at. We expect this stock may continue furthermore upside. Possible target towards 2000 we may see in the next couple of months. So Sun Pharma buy and accumulate would be the strategy with stop loss of 1780. Another stock is that we like for positional perspective from AMC space. So Aditya Birla Sun Life AMC is also looking promising. Series of higher top higher bottom formation is there. Stock is almost trading near to its all-time high trajectory, and the way stock has moved up in last couple of months, we believe that here there is a potential to continue up move. 950 to 1000 would be the next target on a positional perspective. So Aditya Birla Sun Life AMC can be looked at for buy and accumulate with stop loss of 775.
All right, Sun Pharma and Aditya Birla Sun Life AMC as topics. But on that note, we have to let you go, Rajesh. Thank you so much for your time. We hope that we connect with you soon.
Thank you.
All right, let's take a quick check of the markets before we move on to the next guest of the show. Sensex did see a good start, but right now it's off its day's high and it is down about 85 points below that 78 100 mark. Even Nifty is down, and Nifty is below that 623, 650 odd levels at this point of time. And majority of the sectors have turned into the green, turned into the red. Only Nifty Media Index is outperforming, and it is up about 1% at this point of time. Otherwise, autos, banks, metals, all of them not doing well, seeing a cuts of about 3/10 to 4/10%. Nifty IT index also trying to limit the losses, that is up about 1/10% at this point of time. On the other hand, Nifty Realty Index seeing the worst sector performer at this hour, down about. But on that note, let's quickly get on board with the fundamental guest of the show. We have Kranthi Bathini of WealthMills Securities. Kranthi, good morning. A very happy new year to you.
Lovisha, good morning and very happy new year to you and to all the viewers of Money Control.
Thank you, Kranthi. Kranthi, our 3 months of correction, do you believe that the markets are seeing a positive place to start with in 2025?
Yeah, it's a good note. Whenever market comes to the range of 200-day moving average of Nifty, we tend to see some kind of bouncing back and buying interest that's coming back into the markets. So markets are by and large, they're right now trading at a very tight note. They're in range mode at this point of time. But as we are getting into the new year, market tried to discount the earnings of 26 and 27, so which will increase the headroom for the markets from this level. So what we are seeing, this range of the market, market should bottom out in this range, and most probably we are headed towards the previous highs.
Okay, let's divide into first half and a second half of the market. So how do you expect the markets to move in the first half, and do you expect the pace to pick up from the second half onwards of this year?
By and large, today is the FPA participation is going to be very minuscule because of the holiday season is going on, and also today majority of the markets are closed on account of the New Year Eve. So we tend to see some kind of a very low volume kind of day. But what we can sense is we are going to get the further direction of the market during this week. And also the point to ponder upon us, the FPIs have been the net sellers during the 2024. They have sold for a tune of more than $60 billion. Lovisha, it would have been 5-6 years back or a decade back if the FPIs are exiting India for such a tune of quantum of money from Indian markets. Markets would have been entered into a long bear market. But this time is different. The markets are resilient and resurgent, and markets are still in an uptrend. So these are the changing dynamics of Indian markets at this point of time. Definitely, markets stands at a strong note, despite of here and there some kind of pessimism that do creeps into the market. But Indian markets are headed towards a new highs in the coming quarters.
Okay. You said that the new highs could be expected. What are you targeting? Is there any target point that you're eyeing for Nifty?
Most probably markets can head towards the hitting the previous highs of Nifty, which is on cards always, 16,500. This can be the year-end achievable target, which can be possible for Nifty, which is on cards. Lovisha, Indian markets are surprises the perennial bulls, and also they surprises the perennial bears. They both the pessimists and the optimists get surprised with Indian markets. That's what the beauty of Indian markets is concerned. So by and large, we are in a positive direction. Of course, we do come across some kind of a sense of slowdown in growth and all, but Indian markets have been crossing the wall of worries. But 2025 is going to be the stock pickers market. That's what also proven in 2024 also. By and large, it's a stock pickers market.
That's right. Like, how are you finding the valuations at this point in time? We will soon be entering the Q3 earnings season, Kranti. So, are you finding that the valuations are still elevated, or do you expect that they have become attractive after the 3 months of sell-off that we saw?
With the recent consolidation and also the Q3 earnings are definitely, as you rightly mentioned, in next few days we are heading towards the um, Q3 earnings season. By and large, we can see some kind of resurgent and resilience with respect to the Q3 earnings are concerned because of the Q1 and Q2. There is a kind of a slowdown in terms of the capex and also erratic monsoons that has impacted the domestic growth. But Q3, what we can say sense at this point of time is we can expect some kind of a recovery in terms of the earnings. That's what we are anticipating at this point of time. By and large, Q3 is going to be a better quarter when compared to the Q2 is concerned, which is the first half of the year. In terms of the valuations are concerned, if I have to compare the market in a longer term perspective, and for an investor who is coming up with a investment horizon of 2 to 3 years, definitely the valuations looks attractive. For medium to short term, of course, some kind of earnings disappointment was there, but for an investor who is coming with a time horizon of 2 to 3 years, definitely it's a good entry level for the markets for the investors.
Okay, and what is the next big risk for the markets? It could be the US Fed policy, it could be the Trump's policies that the markets are on wait and watch mode. But what are you watching out in particular for now?
Yeah, definitely. In the month of Jan, by 22nd of Jan, we'll have the new administration in US, and the new administration is pro business by and large. So, of course, there are some kind of news about the trade wars and the tariffs and all, but by and large, what we believe is Indian markets are going to take the advantage of these geopolitical policy making decisions are concerned. uh, the Fed is in a very dichotomic situation. They have given a guidance of reducing the interest rates. Now, still for them also, inflation is the key concern at this point of time. But the dynamics of U.S. economy is quite strong. So how they are going to balance the growth as well as the inflation is the crux. Coming back home at India, how the MPC led by the new Reserve Bank governor, how they are going to have their stance with respect to the monetary policy is concerned. This is also very important thing. These are the crucial parameters one need to look forward. By and large, for the global markets are concerned, the U.S. Administration, the new administration led by President Trump, is going to determine the dynamics of the market. But India, by and large, we are going to see one is the MPC, the rate cut, how RBI is going to give, whether it's in a baby steps or how the cycle is going to start. We need to keenly wait and watch. By and large, the current RBI governor definitely is going to give elevation towards growth. And also, we have the big event for the market, which is in the first of Feb, which is the full-fledged budget for the current government. So these are the major immediate triggers for the markets going ahead.
Okay, all right. Kranti, you did mention about, India could benefit out of the trade tariffs that Trump has been talking about. But what about the stronger dollar and the yields, which is also going up? Because Trump has been quite vocal about US exceptionalism and making America great again. How would you place FIIs at that point of time, and would they be even more hesitant to come back to emerging market like India?
You made a very valid point. As U.S. economy is moving from strength to strength, some kind of the FPF flows have been what we witnessed is some kind of money is chasing the mature market like U.S. Markets are concerned. But some kind of risk appetite still there with respect to the emerging markets are concerned, especially markets like India, which offers a a strong earning visibility and the growth visibility for a longer term perspective. So some kind of a long only money, which towards getting allocated towards territories like India is still there on the sidelines. So I'm going to sure once the growth resumes in India and also the corporate earnings gives the strength to the investors and confidence to the investors, I'm sure definitely the FA flows are going to come back to markets like India. So we are pretty much sure on a medium to longer term perspective, the long only money which is towards the emerging markets like India, definitely it's going to come back. Some kind of money has been getting allocated to uh, the the large markets, but still there is a ample liquidity waiting in the sidelines to get into markets like India at a appropriate time.
Okay, okay. So FI flows will come back, but it might take some time for them to return at this point of time. But what does it mean for large caps then, Kranti? Because FIs are major owners of the large caps in India. So can we expect that the large cap rally is expected to remain a bit subdued in the first half of this year?
The first half of the year, the earnings are crucial for these large cap companies. Once the earning revival that takes place, we can see some kind of margin of safety and also the legroom for the PE expansion can happen in the large cap companies. So that can be possible. One thing is the corporate performance of the companies and also from the government policies, and the rate cut can give some kind of headroom towards the corporate earnings going forward. By and large, in the first half of the year, the large caps are can be in a consolidation phase. There can be a selective buying and we need to expect the support for the Nifty as per the large caps are concerned, like names like Reliance Industries, HDFC Bank. These are the pockets of the large caps where the heavy lifting is needed for the markets to go forward. But by and large, it's going to be a stock specific market. There are some funds across US also who are keenly observing the developments in Indian markets. And if we interact with the fund managers who originated from US, they are optimistic about the prospects of Indian markets on a longer term perspective.
Okay, all right. But now that you said that we're beginning with the Q3 earnings season as well, how should investors churn their portfolio? Any sectors that they should be keeping a watch on and a tab on?
As per the medium to long term is concerned, one can keep names like the infrastructure, which is going to be the major theme for the government going ahead. And also the consumer, the domestic consumer, the sentiment has been quite weak. But in terms of the long term prospects are concerned, we see the Indian consumer can be increasing their pocket of consumption. This is a new theme that one can keep on their radar. And also the new digital age companies, they have been outperformed names like Zomato and Swiggy's of the world. One can keep this theme on their watch list going ahead. But the major center of the theme for us is the defense is going to be the interesting theme. These stocks have witnessed some kind of consolidation and correction from its peaks on an average. Names in the defense space, they have corrected 15 to 20% on an average. So, but still, with respect to the earning visibility and order book of these companies, one can still get a mid-teen kind of returns from this sector. So these are our primary focused sector, and also power is going to be one of the interesting theme going ahead. That can be green energy and also the nuclear energy. That's where the government reforms and major policy decisions are that's going to come. So one can have a look in the power theme, and in the among the power theme, one can keep nuclear power as a theme going ahead.
Okay, so a lot of capex oriented plays that investors need to watch out for this year as well. But with that, we have to let you go, Kranti. Thank you so much for your time, and thank you for taking out time on a New Year day. So hope that we connect with you soon as well.
Thank you, Lovisha, and Best wishes for the new year to you and the viewers of Money Control.
Thank you. Thank you so much, Kranthi. All right, let's take a quick check of the markets. Sensex has intensified its sell-off and it is down about 200 points below that 78,000 levels. And even Nifty is down about 77, seeing a cut of about 0.3% below that 23,600 odd levels. So yes, so we did start on a positive note, we did start on a bullish note, but now we can see that some of the selling has been kicked in and investors have been taking a bit of a profit booking ahead of the Q3 results number as well. Majority of the sectors have slipped in the green. Only one, which is your Nifty Media Index, has been outperforming, up about 0.8%. India Wix has also spiked up 1% at this point of time. Mid cap and small cap indices, mid caps are seeing a cut of 0.1%. However, small caps are outperforming. They are up about 0.2% in this weakish market. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell, and we will be discussing about how the market has developed and what the stocks were in focus. Until then, signing off, do stay tuned to moneycontrol.com for all the news updates and market insights.